Bitcoin to 100,000, Bitcoin to 500,000, Bitcoin to 1,000,000. We've all seen these price target headlines come out, and I wanted to talk about two methods to simply back into an intrinsic value for Bitcoin and possibly where these targets are actually coming from. Because most of these targets are most likely ballpark or pulled out from you know where. So how much should one Bitcoin be worth? What makes Bitcoin valuations a little tougher than something like stocks or real estate is that it doesn't actually produce any cash flow. It's more like a commodity or a currency, which makes valuing it a little harder and requires a different approach. Bitcoin currently sits at 45,763. If you look at the all-time chart, I mean, it's absolutely insane. Looking back to when it was created till now, this is one of the best performing assets of all time. And I know you're thinking, man, what happens if I had invested $1,000 in 2010? You probably would have sold it sooner and you wouldn't have held through. But it's pointless to reminisce on the past. We're talking about now and what we think it should be valued at. That way we can do a risk reward analysis to see, hey, is there still room for Bitcoin to go higher? To get an idea of how to value Bitcoin, we have to determine if Bitcoin acts more like a currency or something like gold, because that is extremely important in how we calculate the value down below. So I'm more in the digital gold camp because of how I personally use Bitcoin. It was created as an eCash, but I don't see a lot of people using it because of the higher fees. The scalability just isn't there. Of course, it can get upgraded over time. And then lastly, governments treat it as property. But that's most likely because they want to collect those sweet taxes. This chart from Investopedia does a good job of showing the different traits between gold, fiat, and crypto. I tie the closest resemblance to gold, and therefore that is how I try to value it. Since Bitcoin is like a digital gold, we can compare gold's value to what Bitcoin is at right now and see what the potential market could be for Bitcoin if it replaced or caught up to the store of value asset class like gold. In terms of total broad money that's out there right now, there's around $96 trillion worth of currencies. If you look at the net worth of all the countries in the world, it's around 418 trillion. With gold being around 10 to 11 billion dollars in value, that means gold is around 2.5% of the total world's net worth. If we do some simple back of the envelope math, we can figure out what Bitcoin would be worth if it kind of got to the same valuation. If we look at the total circulating supply of Bitcoin, it's currently around 19 million, and there'll only ever be 21 million in existence. 2140 is about the time where the full supply will be mined. Anyone watching this, we probably won't be around, but in order to be conservative, I'm just going to use that full 21 million calculation. So this number actually may be a little low, but if we just simply take the $10 trillion for gold, divide by the number of Bitcoin, we're talking about $476,000 per Bitcoin. That represents around a 900% return from where we're at right now, which is obviously a great percentage. Unfortunately, we don't know the timeline of how long it would take to get there. Some people may say it will be globally adopted in 5 years. Other people may say 20 years. No one really knows the answer. We just have a reference point from the simple calculation to understand that's kind of where it's going towards if it gets adopted like gold. The next common method used to back into value is stock to flow. And this really is a measure of scarcity for an asset and takes the supply of that asset and divides by the current rate of production on a yearly basis. And the higher the number, the more scarce it is. So if we look at gold as a stock to flow ratio of 62, that just simply means 62 years needs to go by in order to create the current supply of gold that's out there. What's interesting about gold is that there has to be some assumptions around that number because the rate of production or the current supply that's out there isn't fully known because someone could be hoarding their gold. There could be miners that aren't reporting the correct numbers. So that 62 number is based on some assumptions, but ballpark, it's good enough. What's nice about Bitcoin is we know all the numbers at all times when it comes to total supply, the amount that's being produced per year, because it's all programmed into the original protocol. We know as of this video, there's 18,920 with a 657,000 production rate. That brings the stock to flow ratio to around 29. So gold actually has a higher scarcity right now. The thing about Bitcoin though, is that it has halving cycles. So every 4 years, the amount of produced Bitcoin goes down, and therefore this number would go up and becomes more scarce. Based on the the prediction that the more scarce something is, the value goes up. That's how we come up with this nifty little chart down here. You may have seen it, the stock to flow ratio chart. Anytime you see a social media person or influencer bring up the stock to flow chart, that's what they're talking about. It is a line that predicts where Bitcoin will go over time based on this formula or mathematical model that was created in 2019. The only downside I see with this is the model for this was created after data was already out there about the price. So there could be a coincidence of the data lining up with this formula, and we don't necessarily have to follow this path of, oh, we're gonna hit 100,000 on January 29th, 2023. Like, no one knows. It's a prediction, but obviously there's no guarantees. I think an important takeaway is backing into any intrinsic value requires assumptions, and with anything, especially in crypto, it has risk. In my opinion, crypto still is high risk, high volatility, even if it's Bitcoin and it's more established now than previous years. Crypto still has a lot of potential, but at the same time, there's a lot of risk. You can be as bullish on Bitcoin as you want, but hypothetically, if quantum computing got around to being able to brute force passwords, no one's Bitcoin would be safe, and obviously that wouldn't be good for the value. At the same time, the protocol can be changed, and if there is a threat on the horizon, we could change the way Bitcoin works to protect it from a security standpoint. The point I'm trying to make is that no one knows what the future holds. With the higher potential for returns, having it as a lower percentage of your portfolio, if it goes to zero, it's not the end of the world, but if you make it a large percentage of your portfolio and something happens, then you can lose a ton of your net worth. Now, if you're a high risk taker, then you probably don't care about that. I'm just putting it out there that risk management is extremely important when it comes to crypto. If you guys did learn something and enjoyed the video, make sure to hit that like button, as well as consider subscribing to Main Street Wolf, where we talk cryptocurrency, anything to do with money. Thanks guys for watching, and have a great day.